Hello, Louis Llanos here. Quick video today. I wanted to just talk a little bit about the markets. Very interesting day today. Looking at our dynamic growth portfolio, it's very interesting to see because there's a lot of actionable information that's coming from the markets today, in my opinion. The first thing is we're seeing a lot of follow through with the leadership, the kind of companies that are creating the new products and services. Today we saw, first of all, the market was up about just over 90 basis points, or almost 1%, which is a nice day. But the dynamic growth is up almost twice that amount, up 1.86% today, mainly because we're seeing big follow through with certain companies. We're seeing big follow through with Paylocity, symbol PCTY. That stock is up 4.97%. Had a really nice breakout. We saw it trading sideways. It worked really kind of classically breaking out. So very strong volume, up nicely again. Again, that's the kind of stuff we're seeing. We're seeing companies like Alibaba, another one of our holdings, doing very well, having a follow through, up 3.63% on a gap. Interesting companies like ServiceNow. ServiceNow was a company that I recommended on Real Vision quite a while ago, has done very well. And it went through a long basing period where it went kind of sideways for a while. It is now, fundamentals are improving, earnings are improving, cash flow is improving, revenue is very strong, and the stock is now breaking out and going into new ranges. Another company would be Fortinet. Fortinet, that's FTNT, up 2.73%. We took a position in a company called Universal Displays. They're involved with displays that you see in important products, like, for example, my Apple Watch uses their displays. That company is doing well, accelerated revenue, accelerated earnings, and that particular stock is up 4% today. So those are significant multiples above the market, and that's really what we want to see. We've had some good success as well with Skyworks Solutions, which is a 5G company that's involved with 5G, and that theme seems to be working pretty well. We have taken some money off of the table of that, but we're leaving on a good part of our position for longer term growth because there's so much potential there. There's other companies that are just kind of sitting there, like, for example, Vertex Pharmaceuticals. The fundamentals are all there, but it's not getting a catalyst with price movement moving higher. It's just moving sideways. So that could be a source of funds. And that's one of the things that's key with this strategy, in the dynamic growth strategy, is it's really looking to be in those names that are working right now and to free up capital when it's not working or moving down. And so the strategy is more active, and it's really involved mostly with companies that have new products and services that are in high demand, some change that's going on, and a technical catalyst. So I think that we're in a kind of market that this strategy could do well. And over the long run, this type of strategy does very, very well, especially when markets also start getting rocky, because this strategy will literally pull back from stocks. But what's interesting right now is a lot of companies are coming up into buy range. There's a lot of companies that are looking at our live trades right now. There are companies that are kind of poised to be new positions, and I'm not going to mention all those names. That's generally not something I want to put out there. But this is the kind of thing that I think investors should look at. I had several questions lately of people going, I didn't think the market was going to do so well last year, and I'm sitting on cash. Should I get in? And what I'm telling people is that, look, I don't know if the market's going to continue on higher. It looks like it is because we're in an election year. The momentum is strong. The Fed seems to be propping up the market. The economic numbers look strong. I'm telling people, look, put the money to work, because in this investment strategy, we're going to raise cash if the trends are not in place. And we're going to put cash to work when buy signals are created. So there's really not a bad time, I think, to put money to work. So in this type of strategy. Now, if you're buying an index fund, and I think that's where people are kind of conditioned to think about. They think about buying an index fund. I'm going to just own everything. then, if I buy after the market has had a big run, it's really not good. That's not what this strategy is. So for a lot of people that have money on the sidelines, this type of strategy makes a lot of sense to me. I have my own money in it. Investors who have just been concerned really should think a little bit differently, think outside the box. What if you had your money put to work in a way where the strategy is actually timed, where these things all line up, where the chart patterns are lining up, where the technicals are lining up, when the company's fundamentals are lining up, revenue is accelerating, they have something that's doing well with the company. And when it's not, you're not putting the money to work. One interesting statistic I'd like to share with you is we do quantitative analysis, and we did a test looking over the last 20 years of all the stocks in the Russell 3000. And what's interesting is there's two interesting statistics in my mind, I think, that I'd like to share with you. The first is that if you have a company that is actually going to be profitable in a 6-month period of time, normally if that company is breaking into a new range, a new high, normally that company will not go down by 10% or more if it's profitable. So you can really see and have a good idea if a company is not doing well and it starts drifting lower between 5, 6, 7, 8, 9, 10%, it's not likely to do well in the next 6 months. The other thing I'd like to point out is most companies, if they have not started moving within, say, 21 trading days, and we tested lots of different trading days, those companies tend to not have a profit in the next 6 months. So you want to have your timing together, and this is one thing that's important. If you have the general market not doing well, so this is another thing that's really important. If the general market is not doing well, most stocks are not going to do well, period. Remember, one of the things that we're going through right now is a huge technological and innovation change, and we're seeing them in lots of different areas. It's not just technology. I mean, it's also in the biogenetics area. We're seeing a lot of innovation. And that's the beautiful thing about entrepreneurial capitalism, is that there's this kind of creative destruction thing that's always going on, where new companies are coming in with new things that are going to make a lot of sense, and as they catch on, and it could be something as simple as like Lululemon, which was a great stock, a company that, the yoga trend came in. I mean, my daughter loves Lululemon, and she's 13. There's always something to be looking at. So just keep that in mind. Just wanted to share with you that what you're not seeing in the headlines right now is that these types of companies are breaking out. And that to me is a good sign as we're coming into the first of the year. We'll see, and we'll always be keeping an eye as well. But anyway, Happy New Year, everybody. Good to talk to you. Have a great day.